Hi everyone, hope you're all doing well. Hope you had a great weekend. Today we're going to talk about 2, maybe 3 UK stocks that I own that could move a significant amount this week. And then I'll help you get ready for the week ahead with also some other significant data that will come out that could move the stock market. So a bit of a market preview. Hope that is all okay for you guys and hope there's some useful information in here for you guys. Before we do get onto the video, just a shout out from today's sponsor, which is investing.com. These guys, I'm sure you've seen me use before in my videos. Quite often I have their news stories on my videos, talk about something that's moved in the stock market that day. But today we're going to also look at some of their other features like Investing Pro. Quite often people ask me about where I get my ideas from when I'm investing and buying new stocks. A platform like investing.com and Investing Pro is one of those platforms that can help me. They currently have a Pro Picks AI, and this is AI picking stocks that can outperform the market. You can see here one of their stock picks or stock pickers, Tech Titans, has returned a 29% annual return, which is absolutely amazing, and that's a total return of 2,700%, which is absolutely amazing. Significantly more than some other stock picking websites out there, and as well as that for a fraction of the price as well, which is obviously fantastic. And as well as that, you do get Warren AI, which is a great AI research tool to help you when you are researching the stocks. If you do want to join Investing Pro, there's going to be a link in the description, guys. If you do go through the link in the description and a link in the comment section as well, you'll be able to join through there, and there's also a bit of a discount on top for you guys, so take advantage of that. Honestly guys, it's a very good platform to help you with picking your stocks. So yeah, I do actually really recommend this one. Thanks to investing.com for sponsoring the video as well. So key data to start off with, we have the UK GDP growth coming out. That's going to be tomorrow. I would expect it to be pretty good considering we've had such good weather. The good weather, people will be going out a lot more during summer. Maybe a lot of people think go on holiday. I would expect spending to be pretty good over this time period. So we'll see what happens there. Or hopefully the warm weather's got people spending. If we do see weak GDP growth coming, considering how the weather's been, I would really start to get concerned around the UK economy, so we'll see what happens there. And then we also have the US GDP growth coming in on Thursday as well, so we'll see what's going on with the US side of it. Don't know if you saw, this was I mentioned this on the Patreon actually last night. Kind of got really no media. I mean, I know I've got BBC up here and it's really up there with a big headline, but it wasn't really talked about and it wasn't really pushed that much in the media over the last week. But the US economic growth revised up on strong consumer spending. Didn't, this is why I always say, bad news doesn't make good headlines. So sorry, good news doesn't make good headlines. We've got to talk about the negatives. Saw hardly any mention of this here, but you can see the US economy grew faster than previously thought through spring. The rate of growth was revised up to 3.8% from 3.3%. I mean, we're not even talking like a steady jump. Like, that's a pretty significant jump there. Yeah, you're talking, what, nearly up to 20% hike there? That's incredible. Like, how, I want to know how they managed to forecast that so wrong. You start to think, is there some sort of agenda going on here? Like, that is incredible, that rate revised upwards. And this is even better. Look at this. The second quarter growth is the fastest pace in nearly 2 years. How impressive is that? Yeah, very, very impressive there. This is what I think Warren Buffett always says is, don't bet against the US economy. So many times you see like, oh, is this the end for the US economy? And it just keeps, powering forward. It's definitely something special there, isn't it? Anyway, earnings this week. First of all, not much on the US front. We're kind of going through a bit of a quiet period, and then we're going to get ready for Q3 earnings season, which I think starts in around about 2 weeks, I think it is, which is scary to think about. And yeah, we'll start seeing earnings really pick up in 2 weeks. This week, though, there is still a big one on the list, which is Nike. Nike reporting, and Nike's a big one for me from a UK point of view, because what's going to happen is JD Sports will probably move off what's happening with Nike if there's more signs of a turnaround. Saying that, maybe Zotefoams could move a little bit as well, potentially. I forgot about that one, so maybe it's actually 4 stocks of mine that could move a significant amount this week. But yeah, Nike's had a pretty decent recovery since the April lows, although over the last couple of weeks it has just pulled back a little bit. But the last earnings you can see here, there was pretty significant jump around optimism that Nike's turning around. Now, looking at the numbers here, sales growth is expected to decline 5%, which is a pretty significant improvement from the 12% in last quarter, although they are now overlapping the easier comps. So make of that of how you want to there. The big thing is EPS. I can't believe the big downgrade on EPS here. So they're expected 0.7 to go down to 0.27. That's a significant decrease in the EPS. I would really expect them to hit that EPS. If they're missing that EPS, that's concerning. I don't know what that actually puts it on a forward P basis. Yeah, 40 times earnings for Nike now because that EPS is dropping that much. Oh, I've personally not bought Nike. I just, for me, it wasn't one that I wanted to buy. If Nike turns around, I've got stocks that will benefit from it, from the likes of JD Sports. Maybe Zotefoams a little bit more. I don't know. But yeah, it's just not one for me. But I always look at Nike's earnings because I do have a couple of stocks that feel the knock-on effect from Nike. So I'll be checking out the earnings out, and we'll see what happens with Nike and if there's a bit of a turnaround going on. Going on to the UK side of it, there's definitely a lot more on the UK side that's going to be reporting earnings. Apart from the two that I think I don't know how you say it. Boku, they're reporting on Tuesday. They're actually, if it is who I think it is, they're actually a really interesting payment company. So yeah, do keep your eyes open for that one, to be fair. And then apart from that, I don't think there's anything too major that I'm going to be keeping an eye on. AJ Bar's always kind of like, yeah, I'm kind of watching that one. But I guess Big Tech's an interesting one, actually, to be fair. JD Wetherspoons, they're always a bit of an interesting one, to be fair. Tesco's, see what's going on with Tesco's. But yeah, the big two, as you can see here, is Card Factory and Greggs. They're going to report on Tuesday and then on the Wednesday. Let's start with Card Factory first because they're reporting earnings. Being on a significant run, as you can see here, which is great to see from Card Factory. I did lock in some profit, as you saw in the UK stocks video that I posted yesterday. It seems like that it just really seems to, I'm not a chart guy, but even me can point out to the chart and go, look at this. So there's a lot of resistance there. Every time it gets to that £1.10p range, it's like, nope, no further. The one time that we did have it, we broke out, and then obviously we dropped off massively since that time. We dropped off back since that time frame, and now we're back up again. Funny enough, that if we go on the Google charts, because it's a bit easier to see on there, if we look at the big drop that happened last time, which was here, the 20th September, down here, which was about a 30% dip, or it was even more, it was a 5% dip. Jeez Louise. Yeah, that happened about this time last year, and it happened at the exact same point where they posted their interim results. Now, obviously, Card Factory are posting their interim results on Tuesday. So we'll see what happens if the market gets nervous again. The reason why it dropped last time is because they brought their interim results out, and even though they told us before that they're going to be H2 heavily weighted, and they saw the H1 results and they went, whoa, that's bad. You're not making that H2. And the market sold it off because of it. And then what happened is they actually hit the H2 results, and the market has still not recovered it back to £1.40 before those earnings, which is really strange. But we're in the same place again, so we'll see if the market throws its toys out of the pram and goes, yeah, you're not hitting that H2 guidance again. You'd think that maybe there's a bit more trust now they've done it once before. We'll see what happens. The only thing that they've already brought an AGM update out with a trading update about the full year guide still being in expectations. They did say that even more this year, it's going to be H2 weighted. So potentially, once again, the market will throw its toys out the pram going, no way you're hitting your H2 numbers, and it might sell it off. The other thing that could happen, I know this is such a sitting on the fence answer I'm giving you here, so I apologise. I normally don't like to give you sit on the fence answers, but I really am. The other thing that might work in its favour is because last year, when we saw the numbers about how heavily it was going to be H2 weighting, the H1s showed like so many negative numbers because the cost savings hadn't been put in place. Now, because the numbers were pretty bad in the H1 last year, and if the H2 weighted again this year, maybe when you see like the declines, because it won't look as bad, maybe the market goes, they're actually not as bad. So yeah, really sit on the fence answer there, apologise. But we'll see what happens with Card Factory. It'd be really good if they do, break that trend out there with Card Factory. It's been a stock that we've been in for, but to be fair, I've been in Card Factory now for 5 years now? And it's been a stock that's done, it's made us some good money, but I'd really like to see the days where Card Factory does start pushing onto that kind of £1.50 range really. So we'll see what happens there. And that leads us on to the last one that is the big interest for me this week, which is Greggs. So Greggs are going to report on the Wednesday. They are coming out with a H3 Q3 results, and we'll see what they report. Obviously, the last few months have been awful for Greggs. We've seen the big collapse in the share price here, down 50%. But obviously, that don't. It's not my problem, is it really? Because obviously I've become a shareholder of Greggs in like the last month, so I'm about exactly break even on Greggs, to be honest with you, right now. And yeah, the last results were obviously pretty poor. Revenue was okay, but it was the EPS that was really dragged down. And as I said in the UK stocks buying video yesterday, like everything that could go wrong for Greggs in that last H1 did. When you talk about the finance costs, the investing for the supply chain, obviously all the stealing issues that are going on at the moment, the weather impact that was happening, that they. We'll see if that's true. I'm always a bit fishy on weather being called out because weather was poor and all those sort of things. So we'll see what happens there. Looking at the last Q3 update, they actually didn't give that much information on EPS, and I think that's what probably the market is more looking at. So we'll see if they disclose that. I don't personally think they will disclose it in that update, but we'll see. The numbers that you're probably looking out for is the total sales. Has there been a rebound in the total sales? And the other number that you're going to be looking for is the like for like. So last time, I think the market was a little bit unhappy with 2.6% growth on like-for-like, which I still think is pretty good for a retailer to have that good like-for-like growth. So yeah, you're probably looking at total sales to ramp up to 8 or 9%. And obviously you want to see that like-for-like pushing probably into that 3 or 4%. If that happens, I reckon, you might see Greggs put a decent rise in. If it doesn't happen, then I think we see legs. Greggs break the levels that it's been supported at the moment, and we do go lower. I think those are your numbers to look out for on the morning. So we'll see what happens there. Any stocks that do make big moves or have interesting news to talk about, or if there's a lot of requests in the comment section, I'll probably cover them on YouTube. Anything I don't cover on YouTube, I'll cover on Patreon for you guys as well. So I'll cover them at some point. I just don't know whether it'll be on the private group or if it'll be on the main YouTube channel. We'll see what happens there with earnings. But best of luck for this week. Let's see what happens. Thanks for watching. Hit the like button. The push to 20,000 subscribers is really on. A lot of you guys subscribed on the last video, which was absolutely amazing. Thank you so much, and thank you for the support. The 20,000 would be a major milestone for me. So yeah, it'd be amazing just to see that far left number move. It's been a long time. I think it was COVID last time that far left number moved. So yeah, it'd be great if that could happen as well. So yeah, thanks for the support, guys. See you in a bit.